It's officially the tax season 2023. The South African Revenue Service will kick off this filing season from tomorrow until the 23rd of October. For many people, the world of taxation is one that is shrouded in confusion. While it's safe to say most people want to be compliant, many don't even know where to start. And therefore, educating the public on the do's and don'ts of tax season not only will help individuals, but will also go a long way towards ensuring overall compliance and a healthy fiscus. To help make sense of it all, I'm joined now by Etienne Retief, tax specialist at the South African Institute of Professional Accountants. Etienne, good afternoon. Welcome to today, and thank you very much for your time. Well, let's talk about the do's and the don'ts of individual filing, how to ensure a smooth tax filing experience as you wish to remain compliant. What are the main ones?
Well, I think the first thing is having all your data ready. By now, you would have received your certificates from financial institutions, employers, and the like. So go through them, make sure you agree with those values, because if there's any problems with regards to values or information on certificates, you need to have them remedied. Accuracy in your filing. There's no question on a tax return that's asked for no particular reason. You fill everything in as accurate as possible, regardless of whether you think it has relevance. And probably the most important thing is don't procrastinate getting it in. If you're ready to file. Don't wait for last minute and then miss the deadline. And if there's any issues with your assessment, don't wait to file for correction or for an objection, because there's short timelines to get all of these things done.
Yeah, I mean, I recently interviewed Mr. Edward Tiswetter, the commissioner, and we're hearing comments from other people that our business team, like Ropiwa Madzena and Melissa Tichy, are talking to, saying we've seen the SARS getting more money, collecting more money, managing to do that. In your view, Etienne, what are some of these new and improved ways that SARS is tightening up on compliance?
Well, I think the first thing is to realize that compliance is more, has always been driven really around filing your return and having your monies paid up to date. SARS has evolved that idea of compliance into the accuracy of the information that you are providing, and also to go after taxpayers where they are not making truthful and proper disclosures, or not making payments and finding ways to collect that money, whether via third-party appointments or other means to collect. And we must understand that SARS receives an enormous amount of data now, third-party data, whether from financial institutions, from attorneys, whether from your employer. So where in the past it was really data being used to confirm what you had filed, where now that data is already populated into the return. So SARS's understanding of your tax affairs is far more complete than it's ever been before.
Yeah, and technology, I'm sure, is playing a part. I don't know how, in your view, technology, the use of technology is helping SARS. I mean, we've got artificial intelligence that's growing, and all sorts of algorithms that we understand are enabling SARS to boost compliance, our compliance with tax obligations.
Well, definitely. So with a large amount of data that SARS receives, the ability for them to process that data or to use that data in a comparative state is quite important. So when you sell your house, that information about your house being sold, SARS gets that information. The banks, for instance, reports on a 6-monthly basis, things like the balance that you have in your account, as well as all in and outflows. So if you, for instance, report on your tax return that you earned a measly amount, and the amount that went through your bank balance or your bank statements is far more significant, they have the intelligence or the systems that already identifies or flags, for instance, that mismatch. So SARS can say, well, please explain. There's, with regards to cryptocurrencies, there's the foreign income, there's share trading. There's just so many places where SARS now can use comparable data and correlate the information that you give to confirm But most of all is that the amount of institutions that now provide information and files supporting information and certificates to SARS has increased exponentially over the last few years.
Yeah, auto assessments, how do they work? And what steps can you take if you're unhappy with your auto assessment?
Okay, so auto assessment is one of those where because SARS receives so much data in terms of things like from the medical aid, from financial institutions, from your employer, they already have enough of that information pre-populated to your return that it pretty much says, well, this is what we see your affairs to be, and you can leave it as is, and that's automatically the assessment. There's no need for you to file further, and that increases the compliance levels. It also reduces the burden on taxpayers. But if you are a more complex taxpayer and you've got a deduction to claim, or you've got other income, or something that's missing from that, or you're not happy with the assessment that is there, in the past you had 40 days to notify SARS of that disagreement, where now it's you've given more time. You're given until the close of the filing season, which is the 23rd of October, to file a return as to how you see it if you're not in agreement with their auto assessment. And then from that, still the assessment that leads the normal process of dispute, and that would still continue forward.
Thank you very much for your time and insights this afternoon and advice. Etienne Retief, tax specialist at the South African Institute of Professional Accountants.